back, we got another snapshot of the U.S. economy this morning. It was retail sales, where the numbers showed U.S. consumers spent a little less in January than they did in the month of December. Retail sales fell by 0.9%. That was a bigger dip than expected. Let's get some perspective. Joining me from Chicago is Sebastian, founder of Option Pit and Chief Investment Officer of Karman Capital. We'll get his take on the economic news and on markets as well. Mark, thanks a lot for joining us. What's your take on these retail sales numbers?
Well, you know, we've been seeing a couple of data points on consumer confidence fading a little bit. So I'm not completely surprised if this turns into a trend over multiple months. We do have a bit of a problem, but you know, this is just the first sign, a little hint. But if we see another number like this in March and then, you know, a little follow-up in April, I think people are going to start getting a little worried here.
Okay, it was a busy week all around. We also got inflation numbers. Jerome Powell spoke to the market as well. What was your take on his testimony, by the way, his messaging to the market? He's clearly telling the markets that you're going to have to wait possibly until the middle of December before we cut.
Well, yeah, and I think the numbers kind of agree with that. If you looked at CPI and PPI, and you know, I think that if you had that, we would have hot CPI, hot PPI, and Powell kind of easing, you know, really trying to talk back market expectations for rate cuts, and bonds would basically be flat, maybe even a little up on the week. That would have surprised me, but that's where we are. And so where I think the market kind of is that we're probably not good. Rate hikes don't seem to be coming anytime soon. We're not having really a lot of rate cuts forecast. So we've reached a point where maybe bonds are a little stable here. Rate a little bit higher than maybe some market participants would like, but stable. Stable rates allow the market to kind of do what it will, and that's a good thing. When the market is really being dictated by the bond market, that can be a tough market to trade, because you'll see good economic data, things like that, and if the bond market moves opposite of what that top line number is and the stock market follows you, it can really throw retail investors off. So I'm liking the fact rates stabilizing. That allows the stock market to kind of separate itself from where the bond market is moving.
Okay, we continue to see movement to some degree away from the big Mag 7 tech stocks into other parts of the market, smaller cap stocks and other of the so-called S&P 493. Does that trend have legs? Will that continue through 2025?
I believe it will. I believe it will. Historically, equal weight S&P, if you go back, 30 years, it's outperformed, cap weighted the SPY ETF, the cap weighted S&P 500. That has not been the case, obviously, the last 5 years. That trend needs to reverse a little bit, and money doesn't flowing out of Apple and Nvidia while the market kind of figures out what's going on there. It's not like it's only going into like stocks that are aspirational that don't make money right now, like a Rocket Lab or an ASTS. They're going into Procter & Gamble, J&J. We're seeing energy start to get a little bit of interest. So yeah, I think money is moving heavily, not just out of the Mag 7 and into smaller names, but also, that next group of like 50 names in the S&P 500 are starting to gather a lot of interest. And
what kind of moves in this regard have you made on behalf of clients?
So most of the money that is broad market exposure, we have rotated into equal weight S&P. Another way of doing that, believe it or not, the diamonds, which is the Dow Jones Industrial Average, the way that index is constructed, it's price weighted, so it moves a little weird, but it actually tracks equal weighted S&P very closely. So you could rotate into diamonds as well. That would be an alternative, because it has a lower carry fee than a lot of the equal weight S&P ETFs.
That's Sebastian, and those are his broad thoughts. After this, an extended conversation